in there as far as the macros are concerned. Now, moving to the markets. Rated short selling rules. SEBI has said that naked short selling is and that institutional investors are barred from day trading. But the regulator has tightened disclosure rules. Yash is standing by now with the details. Experts that we've been speaking to suggest that it's not a significant framework. You've gone over the previous two circulars that SEBI has on short selling. How different is this one?
That's how it is. It's largely a reiteration of the framework on market regulator SEBI. What SEBI has first done is it's defined short selling, which is essentially selling of stocks which the shareholder or the owner does not have. And what circular entails is that SEBI says that all classes of investors like retail as well as institutional investors shall be permitted to short sell. Another point of reiteration is that naked short selling shall not be permitted in the Indian securities market. SEBI also says that all investors are required to mandatorily honor their obligation of delivering the security at the time of the settlement. No institutional investor shall be allowed day trading, or essentially which means to square off their positions on the same day or intraday. As far as the enforcement of this is concerned, SEBI has said the stock exchanges shall frame a uniform provision which takes appropriate action against the brokers for failure to deliver securities. It has also said that a scheme of securities lending and borrowing, which is SLB, shall be put in place simultaneously with allowing institutional investors to short sell, which will give necessary impetus as far as short selling is concerned. Now, importantly, SEBI has said that short selling will also be allowed in stocks as far as the F&O segment is concerned. Just in terms of disclosure, the institutional investors shall disclose upfront at the time of placement of order whether the transaction is a short sell or not. And as far as the retail investors are concerned, they would be permitted to make that disclosure in a similar way, but at the end of the trading hours as far as that particular transaction day is concerned. We also spoke to Sandeep Parekh as well as J.N. Gupta, both experts in the field of securities law. Let's just hear out from them what they had to say as far as this circular from SEBI on short selling is concerned.
From what I read, it then simply a massive departure from the existing position, including stuff like naked short selling is not permitted. That is kind of the existing position in any case. I think they have said institutional shareholders cannot do day trading. So I think that is a new norm which has come in. And I think they're going to tighten the concept of short selling, I guess, but I don't think they're prohibiting short selling as such.
It is not a departure from the existing provision. Now the question comes that if it is not a departure from the existing position, what is the intent of the circular? So that means we need to read between the lines that what are the exact departures and what are the consequences of it.
Well, that's the consensus, not a significant departure from the current framework. Reactions coming into SEBI's framework on short selling, the circular that was issued just a short while ago. The big international